Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Hope everybody's having a good day here so far. Welcome to our show, the Closing Beat, quick stock market update show that we do every day. And yes, let's give a shout out to Heather. Very proud of her accomplishments. She got over 25,000 officially saved up, and another milestone hit, man. We always like to kind of keep tabs of that. And in fact, in our new dojo, we're hoping to actually put stuff in there so you could celebrate different milestones, and we can kind of celebrate together, because every dollar adds up, and it doesn't matter how much money you have. It seems that everybody likes, different milestones that they hit, whether it's you get to 100,000 and so on and so on. It never ends. It's kind of fun to watch as you get your dough straight, so I like that. Hey, we're going to talk about the stock market here today, and I'll make it brief. We'll kind of go through some things real quick here. If you're one of our customers, you go into the dojo, give it just a few more minutes here for me. We're currently upgrading this, so what will happen is if I just kind of bring this down, if you're in there, this is like a client view of what you see. Right up here, there's going to be a new button, and if you have family accounts with us or your spouse has an account with us, you'll be able to click this button, and if they're linked up in Folio, you'll be able to link them up here, so you can actually see everyone's accounts all in one shot. So that will be one of the latest updates. Told you we were working on that last week, and we delivered, right? We got it done. So we control 100% of this. This is 100% our software that we're building. We're super excited about it. You can see all kinds of great stuff about your different accounts in here. You can even see the notes that I've left for you, and of course your performance and everything. And so we just wanted to add that. So if you have a family account, a lot of people, husband, wife, or something like that, and they want to see their accounts together, and I understand that. So we're working through that. As far as the stock market goes here today, hey, you had a decline last week, right? We had Monday off. We're calling it Turnaround Tuesday, man. The market's recovered here today, pretty much reversing all of last week's action. Not quite there if you will count every last penny, but a decent reversal right off the 20-period moving average there. It's earnings season, so you've got a lot of that earnings. You'll see stocks sort of spread apart. They're all over the place, and it's going to get worse if I'm honest there. All 7 names that reported today, including Netflix after hours, did beat on earnings. So a good start there to the main, bulky part of earnings season. And if we look at the markets here today, I'll start with the NASDAQ. It was your best performer here today. Just over 1.3% gain. After hours, you're going to notice it's a little bit higher. It's all going to be Netflix. I believe Netflix had like a double-digit gain after hours, if not more, 10, 11, 12% so far. So you're seeing it up a little bit more. That's going to carry over into tomorrow there. Today was mostly the FANG names, most of them, right? Plus Microsoft there. You got Facebook bouncing off the 200-day. We talked about that last week, getting that pullback all the way down there. JP Morgan had a note out that basically said you got to buy all the FANG stocks there. The sort of, when the Trump was blocked from all of them, the stocks sold off there. JP Morgan said, well, if you take that out of the equation, some of these are pretty good buys at these prices here. Now, Apple wasn't one of the participants today, up about 0.5% on the day, because JP Morgan didn't mention them. If you look at their analyst note that they put out there, didn't really mention them, so that one wasn't one that was moving the needle here today. Nonetheless, the NASDAQ's strong. It's a strong day there. You got the normal big contributors there with the Facebooks and Netflix, of course, and everything. But I want to point out semiconductors. Look at names like Skyworks headed back towards highs there. Lam Research, that, I've been talking about a lot of these lately. They're very extended. You got to be careful on these rallies. They're very, very extended. I've been sort of hinting you want to be in profit-taking mode, not starting new position mode here if you're looking at the semiconductors, but just doing really, really well. And today was no exception to that, helping out the NASDAQ with part of the gains. So although you had your Facebook and Alphabet being the biggest contributors, that's just because they're more weighted towards the more heavily weighted in the NASDAQ. Semiconductors, these are the SMH, just doing really, really well. Refuses to give up at the moment. Now, if you look at the NASDAQ, still hovering around the flat line for the year so far, don't feel like you missed anything, right? If you've been in the NASDAQ all year long, there's a lot of great days, and of course everybody's like, hey, the market's still going up. But realistically, you've gained less than 1% by being invested in the NASDAQ so far. So it seems that we're plowing along, but in reality, Just a slow little bounce so far. If we look over at the S&P, you've got your FANG names plus Microsoft. Those are the biggest contributors on the day. In fact, Facebook is the second biggest contributor of the day, 4% gain off the lows there. Alphabet would be your third biggest contributor to the S&P's gains today, 3.2%, although it's kind of dead, right? If you look over here the last couple months, there's not really anything to get excited about. Today maybe kicks things off and gets you more excited there. But a couple other names that stick out to me. You got CarMax. You know what CarMax does. They broke to new highs today on very heavy volume, very strong type day. So maybe the start of something new for CarMax. You got essentially a 10% gain in CarMax. Great day for that one. General Motors got riding the sort of positive news momentum at the moment and killing it, right? Which is good because check this out. If you look, oh, that's a long way back. Take a look at this here. If you look back over like the last 10 years, even further, General Motors has hovered right around the $35 number. A little more, a little less, just back and forth. This is an impressive move. So General Motors finally, what we would say, waking up, right? So I'm looking at a weekly chart just to go back way back here to 2009. After the split, and you've got this big push above those highs. So I think that's pretty impressive for General Motors. Obviously, they're looking to compete, had a lot of positive press here lately, and so well over 35. Now we're pushing close to 55, so pretty impressive there. Looking at things a little bit different, you got Etsy. And this stock's on fire, man. Another 8% here today. You know how we say stocks go too far? When they go too far too fast, that's a big deal. Well, that applies in the long term as well. If you're an investor in a particular stock, look at the weekly chart of Etsy. Now, this is just longer term, right? But you got a nice uptrend. Everything's good, a little back and forth. This new uptrend now getting really extended here. So something to keep an eye on. If you've got Etsy, you're more of an investor, and that's the case, then you're not looking day to day, but you are saying, okay, $50 to $220, I don't know, what's going on here? You want to be able to sure that you're locking in some of those profits along the way if you're an investor in old Etsy there. Hey, our FinTips videos this week, a little bit of a shortened week, but got some good ones. We started off this business focused on the beginner, and we still will always focus on the beginner as well, because I think it's important that the beginners get the financial advice that the wealthy people get. That's why I started the whole business. And so we're always going to focus on them. And this week, we're going back to our roots a little bit with our FinTips videos to help those of you, especially with tax season. You got the Roth IRA, your traditional IRA, SEP IRA, simple, whatever it may be. How do you report that stuff? Like, do you have to report that on your taxes, and why might you? So the next couple days we'll focus on that. Also, our class, our Wine and Wealth class, right over here in the Speakeasy, that building that you see right there in our office is the Speakeasy. It's a little wine bar sort of thing where we do our class on Thursday nights. We're going to focus on getting more money on your taxes than just the standard deduction in your IRA. And I shouldn't have said it that way, than just the normal deduction in your IRA. So, you know, you put $6,000 in, and for the most part, that comes off your income. How do you get more without contributing more, right? How do we get some more money out of the tax system? So Thursday night, we'll cover that there, helping out our customers. If you are one of our customers, you'll see it pop up live in the dojo there, and we'll, of course, be happy to help. Come grab a glass of wine with me, and let's hang out a little bit. All right, sector breakdown. There's not a whole lot of craziness to cover today. You've got energy doing the same thing, killing it. Energy, super strong. Look at some of the gains in energy. I'm going to put this to the 6-month chart. By the way, all of this is available to customers in there. We're going to use month to date, right? Because it's just the first month. That's essentially saying year to date. And I looked at this, I don't know, 15 minutes ago or something, and I thought, uh-oh, it's broke. I got to go find Charlie. This thing's broke. It's showing 30%, 40% gains in here. I can't be right. It's actually right. Look at some of these returns. Occidental Petroleum, just over halfway through the month, right? 34% gains. Marathon, let's call it 30%. Devon, 26. Apache, 26. These are really impressive, and one would argue now starting to be somewhat extended gains. Now, you know, if you've joined us here on the show, you know that this is the one sector that's sort of an outlier. When it gets extended, it can get even more extended. When you have your tech stocks that sort of get extended, they pull back, they get volatile, and that's just because they're in the headlines. Everybody's focused on those stocks. Look at Facebook, right? Extended to the downside, it gets a bounce. That may not be the bottom, but it gets that kind of a bounce. Energy is a little different. Oil itself The actual commodity is a very trending type commodity. So here's kind of a quick lesson real quick. I'll go over to, here, let's do this. We'll go over to oil. This is the price of oil on its own. When it starts an uptrend or a downtrend, boy, that thing continues. Look at how you do not want to fight the trend on something like this. When it has goes more of a downtrend, see if I can zoom out a little bit. There you go. When it goes in more of a downtrend, you see that continues as well. Years going by of an uptrend, years going by of a downtrend. So you never want to be the first to say, hey, it had a good couple months of moving higher, I'll bet on it going down. That's a tough bet to make in the energy space. Any other area, retail, industrials, things like that, healthcare is a good example. When they get extended in the short term, you can count on those starting to pull back a little bit. So just something to point out there, because you're likely going to see those continue doing their miraculous little move there with what they've got going on. All right, so if I go back over here, you got tech and communication services back near the top of the list. That has not been the case consistently this year so far, like energy. If we look at things inside the tech space there, we've got a little bit of a comeback after I don't know, what do we call that? The Trump pullback, the Trump ban pullback or something? So that's what you had there. If we look over the last day, just going real quick here, it's semiconductors. Look at the names in here. In fact, what you could do is say, all right, I know Micron's a semiconductor. Let me click on that. Look up there at that scatter plot. They're all semiconductors hanging out there, helping out. That's not, now today you see others up there, of course, but that has not been the case every day. You've been seeing tech stocks in general, like the other names on the list, your PayPals and Microsoft, things like that, not doing anything, but yet the semiconductors would be up here hanging out. That's continuing, everything looking good there. All right, we'll go over to a couple others. One other one, consumer staples. Where's that at? See this consumer staples down here? If you just look at a simple chart, I don't know, quarter to date, see how this thing's pulled back? You could use any chart to see this, but consumer staples are in fact the most oversold sector in the S&P. All that means is they are pulling back. So a fancy way of saying it's pulling back. It's oversold. It's gone further than what it normally does in the short term, and you would maybe expect or hope to see a little bit of a bounce there. If you're going inside of consumer staples, over here, there you go, you can start to look at stocks that have pulled back enough where maybe you're interested. So here's another view of consumer staples. And let's just say, so far this month, what's going on here? I want the ones that have pulled back the most. You got Coca-Cola, very quickly can see, oh, that's discounted. Maybe I'm into that. Estee Lauder, this was actually a really, really strong stock for quite a bit and has finally started to pull back for you. I don't know if now's the time to buy it, but you get a quick list of what's pulling back and what's just generally weak. So you might look at ConAgra and say, well, that's pulling back. Maybe I want to buy that. Do you? This one's already been pulling back. When you compare it to the sector, I don't know, this one's been weak ahead of time. You like the things like Estee Lauder, which pulled back just with the sector. Same with Kellogg's here. It's just out of favor and has been that way for months and months and months. However, the consumer staples sector over here has only been pulling back here just since like November, not even really November. Let's call it around the holidays, December area into January. So you want stocks that are doing that. They're playing along with the sector. That way if the sector bounces, it's highly likely you're going to see your stock bounce as well. I'll point out Costco, one of the ones that's in that category that was strong and is just probably pulling back because of the sector, maybe a little bit overvalued here, overpriced in the short term. And so as that pulls back, maybe this is one you say, I want to take a look at it. In fact, I got a stats play for you. I don't normally have these lately because they're small gains, and Costco is going to be no exception. It finds itself kind of extended here in the short term. Right, so it's been pulling back a little bit and then just sort of fell off a cliff today. Well, if you look at any time this stock is this extended or more, it averages a bounce of 1.22%, 70.5% of the time. So we're going to play with this here. We're going to say, all right, from the close today, it's not much, I know, it's what it is, but about 359.21. So I'm going to go right here. We'll say, all right, over the next 5 days, the average bounce is right about there. Even if only for a moment, that is statistically how that stock likes to behave when it's extended, such as how it is right now. So quick one to point out for you. All right. We're going to do a watch list, and let me just highlight this. We're going to say Costco is our stats play. Let's just see what happens there, and we'll put it in blue. How about that? All right, we're going to do the watch list here. Have you noticed the dividend stocks? They've been participating more. Dividend stocks all of a sudden are coming back a little bit. Not the consumer staples so much, but dividend stocks in general. And so what we did is we said, well, let's look through the markets here and see if there are better performers than others, but that still have a decent yield. I mean, is there something that we can look at there? And so here we go. The first thing I'm going to do is we're going to say that there's some criteria for this. And bear with me for a second. I'm going to actually just try to pull up the criteria for you so we're all playing the same game. We're going to open up the dividend here. I think I saved it. Okay, so here's the criteria. Has to have at least a 2.5% dividend yield. It's got to be greater than that. We don't mess around with the other stuff. We want the company itself to have a 10% profit margin or greater. That's an arbitrary number, but it's just basically saying we want to know that the company's making money. If they're making money, they could continue to raise the dividend, possibly, or participate in paying the dividend. We didn't want the really tiny companies. Now, granted, we're sorting through the S&P, right? No, we're doing the S&P, the Dow, the Russell, and NASDAQ. Okay, so all of them. So we said, let's weed out the really small companies in there. They're probably not paying a dividend anyway. So $250 million market cap or more. And then just for fun, I went through and I said, I want the ones that the analysts like as well. So they've got to have, they got to be in the top 20th percentile of, or greater, of having analysts with positive recommendations, either a buy rating or an outperform, which is essentially just a stronger buy. And so we're taking a look through those. We wanted those stocks, basically. So there is a criteria. So if you go back and look at this and you say, wait a minute, bud, you didn't, you missed a couple symbols or something. Well, now you know why. All right, so here we go. I'm going to show you the list so you can screenshot it if you want. Go watch list. Someone tell me if that's not good. That should be good here. But what we did is we put them out all on a little scan here for you to take a look at. The first one up, Regions Financial. By the way, these are sorted by their 1-month returns. So we wanted the best performers here in the short term with the highest yield. We don't want the laggards, right? So if I go down towards the bottom of the list, some of these are okay, but I went ahead and just deleted off the ones that have really bad returns over the last 1 month. You're going to find a lot of consumer staples in there. Okay, so let's do an example. You got Regions Financial, which, by the way, if you don't know what the company's doing, they're really trying hard to stay competitive here. They're investing heavily in technology. They're closing out about 100 branches to offset that. And they've got this initiative that's called Simplify and Grow, trying to get their employees to focus around the idea of just simplify the process so that we can grow. If we have to simplify our layout, simplify our technology, that allows us to grow. And they're kind of impressive what they're doing there. Problem with this stock, by the way, and I don't know how they're going to address it, but about 2/3 of their loan book, which is what people look at for banks, you want to know how are their loans exposed, like if they're all auto loans, and you'd be nervous about the auto sector. But 2/3 of their loan book is all commercial and commercial real estate. I don't know that we like that. A little bit of economic risk there if the virus continues to be an issue. But otherwise, let's look at this guy here and see what we've got. Regions Financial. I got the name there in case you've never heard of some of these ticker symbols. The yield, 3.4%. So it's one of the better yielders, not the best, out of the group. It also happens to have the best shorter term performance. So we got a little bit higher of a yield. We've got good performance. Maybe we want to buy on a pullback, something like that. Their profit margin, that's just a check for us. We wanted it to be over 10%. They're at 14.3. Awesome. Market cap, 1.7 billion. I always forget how you label that. Like, how do I tell you that that's 1.75 billion? You're supposed to put something up there, but yeah, I don't know everything, right? So you got market cap. Now, this is the average analyst rating at the moment. The lower the number, the better. So we want to be as close to 1 as possible. So we got the majority of the analysts focused on buys or holds. There are 9 buys and 6 outperforms there. So you can see how it ranks relative to some of the other names in the group there. And so that's Regions Financial. Let's take a look at the chart real quick. I'll pop over here because they're going to have earnings coming up. You can see the performance over the last month, looking good, very much in an uptrend in a sector where everybody's excited right now. Obviously, banks did well. Every bank beat on earnings so far. So maybe these guys are no exception. And so maybe a pullback is viable. It's a watch list type segment that we do here, not a stock picking buy now sort of segment. Okay, so moving on here, you got Zion Bancorp as well. Not as exciting. The yield's a little bit lower. I wanted to find the top 7 names with the best performance and the highest yield because it's 7 names. You may only find one you like, but this is a way to kind of zoom in. That's why JP Morgan's not on the group. So you got FitBoy, or we call it Fifth Third Bank is the name of the company. Traders just say FitBoy. I don't know why. Just habit. It's a little bigger than Regions Financial actually there, but they got a little more debt, so that comes with the territory. And also I put these two together because if real estate or commercial real estate loans are something that turns you off a little bit, these two you may want to avoid. They've got higher, they've made more loans in that category. So about 2/3 of their business loan book is in commercial loans there. I don't love it. I don't hate it, but that's you'd like to see a little more diversity. Anyways, 3.4% yield there, 17.6% gain, so not as good as Regions. Profit margin's a little bit better than Regions there. Analysts a little bit more bullish on this one, and you've got 10 buys, 6 outperforms. So you can see how those two are very consistent there. Oceans First, OCFC is the ticker symbol there. This is the smallest of all the banks out there, about $1.2 billion in market cap, if I remember right. Also the slowest annualized grower. I'll show you that in a second. But got a 3.4% yield. Good performance here in the short term, which is a little odd for this stock, by the way. Doesn't normally do those kind of things. Profit margin's not too bad there. That is $1.2 billion. Analysts a little bit more positive on this one. 5 buys, 0 outperforms. And to be fair, there's less analysts covering this stock, so don't let that scare you away there. You're going to notice that a lot of these names are bank related. That's where all the action's at right now. If you're looking for dividend scans there, PNC Financial, you might know these guys. If you're familiar, if they're in your area, it's more of a Carolinas kind of a bank. 3% yield there, 8% rally over the last month. Best profit margin out of the group that we're looking at here, and best growth, by the way, on an earnings per share basis. They have the best growth out of all of them. It's almost in line with US Bank, which would be the next one there, but it's about twice as much in terms of profits, right? You can see profit margin just better over here. So if you had to choose between the two, these little things make a difference, right? If you're going to get about the same growth, do you want the protection of more profits, right? We could eat into that profit margin a little bit and they could still do all right. Or you want US Bank. So something to consider, little extra bits of things to help you there. Anyways, so there you go. You got basically that going on there. What was the other ones there? I wanted to get outside the banks. We got Digital Realty and Broadcom in there as well. Broadcom, naturally, semiconductor. It's going to have the most buy ratings and most outperform ratings of any of them there because the semiconductor sector right now, or industry, people are excited about it. So it just naturally has that at the moment. Everybody's excited about that space. And lastly, you got a REIT, 3.3%. This is a digital cloud-based REIT, so it's a tech REIT, not like a apartment community kind of thing. 6% rally, which is good considering REITs haven't done so well lately here. 17% profit margin, which 90% of that has to be paid out or more in order to be a REIT, so that's good news. 1.8 in terms of the average analyst rating, so one of the better ones of the group, and people are mostly bullish on this one. They have been, because this is not so much of a virus-sensitive stock. Because they're in that cloud tech space, if we're working from home, if the virus perks up again, that would be one of the REITs that wouldn't get damaged by the news there. And so that's your dividend scan for the day. I'll put it up real quick if you want to look through some of the others at the bottom of the list. Goes all the way down to Atmos Energy. You got Coke in there as well. Boston Properties, kind of interesting. Realty Income, I know, is popular, so you can see where they stand. These are the ones that have been losing over the last month. So remember I said I don't like these. They get worse as you go down the list. But these maybe, these are your weak links that you're picking on. So you got to know what you're getting into. All right, stocks in the news. Let's take a look and see what's going on. We'll let the stream catch up, and I'll try to answer your questions. If you have a question, go ahead, give it a post. Somewhere I'll be able to see it, and we'll take it from there. You got Apple in the news. Well, it wasn't mentioned in the JP Morgan article, so not cool there. They also are apparently developing a foldable phone. I don't know why. Why? What's the deal, man? It seems like Apple's just kind of following what other people do these days instead of innovating. I've been saying that for a while. Anyways, about a 0.5% gain on the day. Not Not great compared to what every other FANG stock did. Boeing up 3%. Canada says it's going to lift the ban on the 737 MAX tomorrow, actually. So good news for them. Just another country to get some of those planes back in the air. GameStop still added 10% on the day. Barron's over the weekend said that this rally is a short covering rally and nothing more, that this company is not worth 40 bucks a share. Pretty negative on that one, actually. So that is the news there. Speaking of negative, Peloton down about 5%. Apparently they're having trouble with demand. It was the New York Times, I believe. They said that the company is really struggling to meet demand there, which is, you would think, good, but not if you can't satisfy the customer. That's a tough one. All right, you got Bank of America. This is an earnings play, right? So they beat on earnings. Actually, Bank of America, Goldman Sachs, and I believe State Street. Actually, State Street was the only one to be positive here today. Bank of America beat by 5 cents. They're going to buy back $2.9 billion worth of shares. You're going to see a lot more of that. And so that was the news there. I want to point out Trimble. Maybe you've never heard of this, but if I tell you something, you'll know who they are. So Trimble, basically flat on the day. They are going to be taking the place of Concho Resources in the S&P 500. That will start in 2 days. Trimble is, have you ever seen SketchUp? Or you ever watch like HGTV and they go around and show people houses and they're like, all right, if you buy this house, and then they go to like an animated thing and it says, we'll put in this countertop, we'll put this thing over here, we'll knock down this wall and put this furniture here. That's SketchUp. And so they own SketchUp. It's not a big part of their business, but they're big in the construction, sort of architectural software space. And congratulations, because they're getting added to the S&P 500. And so they were in the S&P 400, so somebody's got to take their place, and that's going to be Yeti. Yeti is bumping up to the S&P 400. Stock was down about 6.5% on the day. Lastly, you've got, oh, nope. I typed it in wrong. There you go. This is EW Scripps, different ticker symbol from the spinoff there. The stock was up 5.25% on the day because apparently old Warren Buffett owns about 25% of this company now. And I think that came out the other day. I don't know when it came out, but over the weekend or something. And so the stock was higher on the old Buffett bump there, as they would call it. All right, I'll take your questions and see what we can do here. Hopefully we can do something good. So thoughts on NEO? I still think it's extended in the short term. Gotta be very careful with this one. I get the momentum. I mean, I get that they're doing well, but do you want to pay that price for this stock? Do you think it's going to turn into a Tesla? Do you now? I love it. I love it. How do you link spousal accounts in Folio? Michael, you are linked up, unless it's a new account or something you did without telling me. But you're linked up in there, I believe. If you're not, you just let us know. We'll link it up for you. Or in now? Now. Okay. So now you can actually go in and make a request. If you are already linked up, then it'll do it for you, right? Yep. Do it for you. And then if you're not already linked up, it'll send us a request to link you for you. So let's just take a look and see how old Charlie did here. Is it working? Come on now. It's a test. You won't see it from our side. Did you? What do I do? All right. Well, I'm not going to be able to see it. What are you going to do? A little help? Okay. He's going to help us out.
Set it up real quick.
Okay. So it's going to be in there. It's got to load faster, man.
It's gonna take a second.
It's going to take a second. You got it. Tell us a joke, man.
Why did the chicken cross the road?
Why did the chicken cross the road?
What do you think?
To get to the other side?
Yeah.
Oh, come on.
Yeah.
That's the brain.
That's,
That's the brains around
when
here.
I'm focused on other things.
Oh. Oh, and he's pressing all that stuff. Oh, he just got to type some code out. Let's see if I can answer a question. Oh, Sharisa said she needs hers linked as well. Oh, man. Is it better to keep ETFs in a retail account or IRA? Depends on the type of ETF, actually. So if you're looking at, think about what you're looking at. If you're looking at those growth type ETFs, if you're looking at, dividend related ETFs, can be a completely different story there. And so it depends, really. I mean, that's a broad question to kind of try to answer there. so I'm not sure. Let me just show them that.
Okay.
They're just going to go with this. Okay. So here we go. So basically, I want to show you where it's at. It's not going to load on my side, but you're going to go here. See that little guy? Go into your dojo. You're going to see that little button. All that to show you a button. And then I believe when you click it, see how it's saying, all right, you want to link an account? Give us the username, and you'll be able to link it in there. So there you go. You can have that in there. Yep. Best Rush song you like to play on the drum set. I can't play any Rush song. Come on, anybody that says they can do that too. I mean, that's impressive. Definitely a Neil Peart fan, but no, can't help with that one there. Okay, so what else do we have? I think we covered everything there. What do you got, Cody? Anything?
No, can you read Matthew's comment? It's a good one.
Matthew's got a good comment. 2 peanuts were walking down a dark alley. One was assaulted. It just shows Cody's always watching. Oh, man. All right, we'll leave it on that note and be back again tomorrow. Do this all over again. You enjoy the rest of your day. Thank you so much for joining, and we'll see you tomorrow.